Right, so all the things that I tell you here is basically us building towards the setup, right? So, like I said, first thing that we do is we set overall bias. So, and it consists of three things. The first thing was identify the trend and the strength of the trend. And the second one is reading the candles. So I always identify my bias, I set my bias reading the higher time frames such as weekly or a monthly time frame. And weekly or monthly time frame single candles has a lot of importance to it. So I really want to expand a little bit on this. Also, not just the candles, but the candle patterns, right? So the key patterns that I focus on when I look at the higher time frame to set my overall bias are these four: is basically double top, head and shoulders, double bottom, and inverse head and shoulders. So these are the key important patterns, and if you look at them on the 5-minute time frame, they may not be significant. They may be broken many times and they would not work as very well. But if you noticed one of them on the higher time frames, it could help to set your overall bias for a long time. So imagine we're looking at this chart, and this is a weekly chart, and each and one of these candles represents 1 week. So imagine you're looking at the weekly time frame and you were able to identify this inverse head and shoulders, right? This each candle represents 1 week. And once you identify that, you set your overall bias to bullish because you notice that this is a weak bearish trend. You can see multiple market structure breaks to the upside, and you can see on top of that, you can see a inverse head and shoulders forming. So let's say you look at this, you notice that this is your inverse head and shoulders. You set your overall bias to go long, and then boom, you have 1, 2, 3, 4, 5, 6 weeks of bullish candles. And now you imagine you were only looking for long positions in this whole move to the upside. That could have been a very nice winning streak for straight 2 months, right? This is 8 candles in total. So 8 candles is 2 months of winning. And this is why it is important. It's very simple, right? We all know double bottom or inverse head and shoulders, but it's very important to be early and identify them on the bigger time frame. The same way you identify the trend, the same way you identify the patterns, that helps you when we go further in the course, that helps you with your overall bias and with your overall setups. Now, when I say double bottom, everybody says double bottom is just, 2 bottoms, but there's much more involved in that, right? You need to read the candles. You need to read the pattern. The double bottom is not just, 2 bottoms. You need to look at what is going inside of each and single move, right? So we have a double bottom here, right? But if we look at it a little bit more closely, we have a strong momentum coming down. Then with this type of price action, we have a lack of momentum. Then we have a distribution in price. Then we have, with this move to the downside, we have bears try to step in and take over and take the price lower, but they are failing. We have liquidity grab. Let me delete this really quickly. So we have this support right here. We have this support right here. So we have lack of momentum. We have distribution. We have bears try to take over with this move. They liquidate these buyers right here at this support, and then we have boom, bounce. So you read the candles. Now I want you to look at this. Let me delete this. I want you to look at this, and this is an example of the double bottom, right? So everybody sees this as a double bottom. That's not the way I see it. I read the candles like a book, words in the book, and I'm gonna show you really quickly of how I read this, right? So once again, if we look at this previous one, strong momentum. We have strong momentum here. We have a lack of momentum. We have more and more bulls stepping in by making not move look like this, but more like this, right? Then we have impulse. We have distribution. We have bears try to take over with the strong push to the downside, failing, and then bulls taking over by using this support. So this is how you read the candles. Like, it's not about reading the single pattern, but it's about reading it as a whole. I want everybody to go on the charts and look at it and focus not on the pattern itself, but at the pattern as a whole. Now, once again, another example, right? Strong momentum right here. We have slowing down of momentum right before the drop. We have price slowing down once again. We have price finding the ground. We have bulls showing interest by having this major push. We have bears try to step in, right, with the trying to push the price down. We have the price retesting the support once again. And then we have bulls stepping over and taking over the price, confirming our double bottom and continuation to the upside. Now let's look at double top. Right, the same thing. We have strong momentum coming from the downside. We have slowing down of momentum with this price action going on here. Then we have bulls trying to step in and push the price through this resistance, but they're failing. I need to work on this. Right? And this is our double top, right? This is our resistance. A lot of stops sitting right here. We have distribution. We have push to the upside. The last breath of bulls. The bulls trying to push the price higher. Liquidation. All the stop losses that were here were taken down. Bears take over, right? That's how you read. It's not just about you reading that it has double top, but it's you reading the price action behind all of this that is going on, right? Now let's look at what happened next. Boom. So this is how you need to look at the charts. You shouldn't be looking at the charts like, oh, double top. Oh, nice. No, you need to look at the history. You need to look at the candles like they are the words and read them, right? Now, it's not just the patterns, it's also the individual candles. Now, very, very important. Individual candles can be very useful if used correctly. Individual candles has the most meaning when looked on higher time frames, such as daily, weekly, and monthly. All other time frame candles should not be used alone, and other confirmations should be involved. So, to make it simple, nice, and clear, look at the single candle formations, and single candle formations only has a strong meaning on a bigger time frame. If you look at these candle formations on a lower time frame, such as 5, 15, they're not going to be significant. Don't even look at it. Let's look at some examples. I'm going to show you. On the left, we have a weekly bearish pin bar. What happens next? 8 straight weeks of bearish market conditions. So this is how we look. This is how we gather our information. This is how we set overall bias. We indicate the trend. So let's say this was a weak bearish trend. We indicate the patterns, or we read the candles. So we set our overall bias. We saw this pin bar. Okay, my overall bias is bearish. I am only going to be looking for short positions. Now, this is 8 weeks. This is 2 months of bearish momentum and bearish market conditions. So imagine you dropping down to 2 hour or 30-minute time frame. This could have been like 30, 40 setups to go short, 30 high value setups to go short. Now, once I said I want you to look at the previous slide very quickly. And what I said was, if it's lower than daily, all other time frame candles should not be used alone, and other confirmations should be involved. Now, if we look at a 30-minute bearish pin bar candle, we can see that it was supported by 0.618 fib and 30-minute supply. Only then you should trust the lower time frame candle formations. Only then. So for a weekly, it's enough to see a single candle. For lower than daily time frame candles, it should be used with other confirmations. Very, very crucially important. Let's look at another example. We are looking at a weekly time frame, and once again, you read the candles. You have wick rejection, bullish pin bar. You have bears trying to step in with this move to the downside, liquidating the stop losses that were here. On top of that, we have a double bottom. My bad. On top of that, we have a double bottom. So you gather all this information. You have a strong bullish trend. You have retracement. You have double bottom. You read the single candles. And what happens next? Boom. Multiple weeks of bullishness. So imagine you set your overall bias. You already expect this. Now, all the retail traders notice this only here. And you notice this all the way at the bottom. So you not just could have won more trades, but you also were early, right? So you were ahead of the game. Once again, I'm talking about edge. Edge is about being ahead of the game, ahead of everybody else, right? So these are the importance of the patterns and the single candle formations and reading the price action the way you should. And we're still setting an overall bias. I'm gonna show you later in the course of how it all goes fast and really nice and simple. Now I'm just looking into more detail and trying to explain of how I look at the markets and how I think. In the next lesson, we're gonna talk about magnet zones, which is last but crucial thing to our setting overall bias trading.